Thanks for joining us for another episode of Boom and Bust. I'm your host, Tony Clement, here at the News Forum where all voices matter. As part of Boom and Bust's review of Canada's trade relationships, this show will focus on India. Canada-India trade currently amounts to $10.1 billion in 2019, with much room to grow. Joining us to discuss India's trade relationships is Dr. Amitendu Palit. He is a senior research fellow, National University of Singapore. Welcome to our show.
Thank you so much, Tony, and looking forward to chatting up with you on India-Canada.
Indeed. Let's take a broader look first, if you don't mind, and maybe give us a little bit of a sense. Obviously, COVID is not just a Canadian or North American phenomenon, it's a worldwide phenomenon. Can you give us a sense of how India coped economically with the pandemic outbreaks?
There are two parts to it, Tony. The first is that, as you very correctly mentioned, when we go back and see the way things unfolded from 2020, India was a bit remarkable, I thought, in terms of getting into a lockdown, which was fairly severe in character and pretty early on. From the end of March 2020, it almost completely shut down all activities within itself. And that, as expected, had a hit on the economy. And the numbers that came out at that point in time were quite shocking, if one could describe it that way, in the sense of the first quarter of the last year having experienced a contraction in growth of more than 20%, around 24%. So that was quite a steep fall southward. Then ultimately, as one moved into the latest financial year, what was seen was actually a bit unexpected. Firstly, India was hit by the second wave from the middle of March, and the wave was really severe. I mean, this was the Delta variant running amok. And there was a point in time when the number of daily infections in India were more than 400,000 per day. The number of casualties are very high. There were very serious systemic lapses that were taking place in all parts of the country. Hospitals were overwhelmed, fatalities were rising crazily. But very interestingly, what happened was, unlike the last year, India did not really go into a full closure. And that, I suppose, had two reasons behind it. The first was the fact that India did realize from last year itself that a full closure was not really its way of going ahead. It just couldn't survive. The economy would completely collapse if there was a full closure to that extent. So it had to maintain the basic functions of the economy. And this time around, what happened was that, notwithstanding that very high wave, the central government actually came out with a series of very loose advices, generally guiding the states to follow the containment in the way they thought best suitable given their local conditions. And as a result of that, what we actually saw was the economy never really ceased functioning. There were demand setbacks, as was expected. The consumer sentiment dropped, the consumer demand dropped, but the production didn't get affected. And what we see now is that in the current year, the first quarter has actually produced quite a remarkable turnaround, though compared with the low base of the previous quarter,
right,
which, as I alluded to, had a very strong contraction. So this time we are experiencing a GDP growth rate of around 20%. Obviously, this is not what it is going to be for the rest of the year. But what is heartening is that the pace of vaccination is picking up very rapidly. India is, in fact, administering the largest numbers of vaccines to people as much as possible. There are 2 local vaccines which are now available for fairly widespread use across the country. Obviously, there are gaps. It's a big country. But given the fact that vaccination has come, along with a general maintenance of economic momentum, is a source of hope that finally this year will end with a much better growth number. It will not be possible to completely wipe out the loss suffered last year in terms of economic contraction. But some bits of it should definitely be recovered. And most estimates are pointing to the economy getting close to a double-digit growth, if not that.
We're just about ready for a commercial break, Dr. Palit. So I'll ask my next question after the break. Please stay with us. We'll be right back. And welcome back to Boom and Bust. I'm your host, Tony Clement, here with Dr. Amitendu Palit. He is a senior research fellow at the National University of Singapore, but we're talking about India right now. Dr. Palit, maybe just give us, after that little bit of I think, a very good synopsis of what's happened over COVID with India. Can you talk a little bit about India's economic challenges and opportunities?
Tony, to talk about economic challenges, of course, is I think the biggest as of now is obviously coming to terms with COVID, because COVID has clearly left very large impacts on the economy. And the first of this is in terms of the loss of livelihoods, which the economy has experienced. And one can go back to the scenario as it prevailed around 15 or 16 months ago, when during the first outbreak of COVID, there was a huge exodus of migrant labor going back from the main industrial cities and industrial centers back to their villages. And that was a point in time when the government really had no option other than coming out with a very extensive welfare-oriented food and income support programs, which, needless to say, made a huge dent on the economic exchequer, and that to an unplanned dent. So the livelihood question remains a serious question till now, because notwithstanding the recovery, not all sectors have recovered the way they were functioning at the pre-COVID-19 levels. So livelihoods continue to remain somewhat below the optimum level and the pre-COVID levels. The second challenge which the economy faces, I think, is basically to ensure that there is an appropriate balance in managing the welfare needs of the people, along with getting the economy back to the growth momentum. And unfortunately, the policies in both these respects might not always go hand in hand. I mean, the first set of policies would require the government spending a lot, bringing out subsidies, pushing out expenditure in all fronts. Well, parts of it might fit into an expansionary growth policy for building infrastructure. But at the same time, what has happened, and I think this is where the government deserves some credit for the bold steps that it took, it actually worked on COVID as a bit of an opportunity and took that opportunity to cut off some, I would say, regulatory cholesterol, if one can describe it. Put in some good bursts of reforms in factor markets like land and labor, do away with some outdated legislations as far as retrospective tax and other production policies are concerned. So that, I think, while has been welcomed, the challenge for the government now is to maintain the momentum ahead and ensure that these policies actually result in what it is expecting to achieve, close to a double-digit growth momentum, so that the demand recovers and the livelihoods get sustained.
Can I ask you, you did mention infrastructure just a minute or so ago. Can you go through some of the Indian government's priorities when it comes to infrastructure?
What is, I think, basically guiding the core infrastructure development strategy is what we refer to as the National Infrastructure Pipeline, which is a humongous project spanning all activities of infrastructure, beginning from the physical infrastructure, roads, railways, ports, civil aviation, logistics, and then at the same time also stepping into areas of more service-related infrastructure in the field of energy, telecommunications, urban sector development, real estate, and so on and so forth. The issue over here, Tony, is that I think for a country like India, the infrastructure needs are always going to be very large and they're going to evolve over time. But I think the biggest challenge for the government in this regard is to mobilize the resources. Because as I mentioned, the public funds are clearly not going to be sufficient for managing infrastructure, creation of a scale that is being emphasized. So as a result of that, the government has had to go in for fairly innovative means of financing, one of which is the announcement of the National Monetization Pipeline, which is a fairly interesting scheme in terms of putting up the existing brownfield infrastructure assets that are owned by the government
Right.
to the private sector on a private-public partnership mode, inviting the private sector, basically inviting its efficiency to come and get engaged in the running, maintaining, and functioning of these assets. Over a certain period of time, the lease is to be determined depending upon the asset and the sector for which. But this could be quite attractive. I mean, this could be attractive for Canadian investors as well.
We'll be right back with our guest after that break. Please stay with us. And we're back here at Boom Bust. I'm your host, Tony Clement, with Dr. Amitendu Palit. He is a senior research fellow, National University of Singapore, talking about India. I guess at this point, Dr. Palit, I should ask about Canada. I mentioned right out at the top that Canada-India trade, to me, is a paltry $10.1 billion. It went down probably about 20% during COVID as the Indian economy contracted as well. So to me, that's not a great number, to be honest with you. How can Canada do more trade with India, do you think?
That's an excellent question, Tony. But I think what I'd also like to mention, along with the number that you sort of shared, is the fact that the Canadian investments in India are quite impressive.
Mm-hmm.
So this is an economic relationship which has an interesting dichotomy to it. The size of the trade is not as big as it should be or as it could be. But the size of investments is pretty large. In fact, Canada right now is almost around the 20th topmost source of investments into India. And I think more investments are in the pipeline. But looking at the relationship in totality, I think there is enough ground for both Canada and India to lock their heads together in terms of arriving at an institutional economic framework partnership. And what I'm specifically referring to, luckily enough, is pretty well back on the agenda for both sides, talking about a comprehensive economic partnership agreement, which is just an extensive free trade agreement, including trade in goods and services, as well as investment and a large number of other issues, which, as you recall, was actually being discussed and what was at a fairly advanced stage of completion 6 or 7 years ago before it was suspended. And luckily, it's back into reckoning again. And I think if that kind of a framework comes in, what it is going to do is to first give investors and economic actors on both sides a very clear idea in terms of the fact that both countries are very serious in doing business with each other. And there are a set of rules which are special to both of them. The trade community will get the idea that, look, there is preferential market access to be obtained if one trades through this particular FTA. The investors, in addition to the interest they have already shown, will also get a clear assurance about the fact that the rules of investment are going to be secure and sound so much they can back each other on this front. And what we are very likely to see is a virtuous cycle setting in where investment and trade can complement each other. And this is also in addition to the fact, Tony, that India and Canada have actually a lot of naturals going for them. I mean, there is the diaspora connect, there is the education connect, the strong people-to-people connectivity connect. And most importantly, I think in the current context, the post-COVID context, there is a larger global regional context, which is kind of imploring India and Canada to work much more closely together on the subject of economics and trade.
And would that include supply chains? Obviously, India is making a name for, as usual, a name for itself in vaccines and that kind of distribution. But supply chains are being very disrupted now. Is there an opportunity there?
I think there's a great opportunity. I think there's a great opportunity specifically from an India-Canada perspective when it comes to supply chains in critical minerals, when it comes to supply chains in clean energy, when it comes to supply chains in food products. Because as you very rightly mentioned, I think the question of supply chains is no longer just a question to be looked at by businesses and firms, it's assumed a much larger geo-economic proportion, where India and Canada have started working closely along with a number of other countries, mostly from the G7, and most of which are also notable middle powers of the world with large economies, to ensure that supply chain resiliency gets topmost priority. And we have seen the way, let's say, for example, the Quad partnership of US, Japan, Australia, and India has come together on this subject. And I must also add in this context that India and Canada have also bilaterally displayed a large amount of energy in working together on vaccines. I recall the example of Biological E and Providence Therapeutics working together in this regard. So I think the ground has been well set. Supply chains, yes, clearly. The good part is that the context is already there, and both countries now know that if they have to achieve something, they know clearly where that achievement should target and what kind of rules they require to set the ball rolling.
We're going to continue with our guest, Dr. Amitendu Palit. He is a senior research fellow at the National University of Singapore. We are going to take a brief commercial break. Please stay with us. We have one final segment. We'll be right back. Welcome back to Boom and Bust. I'm your host, Tony Clement, here with Dr. Palit of the University of Singapore. Dr. Palit, I guess I'm getting broader again, talking about some of the geopolitics and the role of China. It's no secret that India is part of the Quad strategic relationship with Japan, the US, and Australia. There's been some border skirmishes with China, and also, obviously, I think a lot of economic competition. Can you sort of comment on China-India relationship as well?
Tony, I think the China-India relationship has really been at its most complex and most troubled over the last 5 to 6 decades. I think since the time India and China actually had an armed conflict in the early 60s, the relationship has never really been this poor. And the crux of it has been the incident that happened last year, when in the high Himalayas there were hostilities leading to loss of lives on both sides, and that really took the relationship down by several notches. But I think, notwithstanding that, and there were reactions that came out from the Indian side in terms of blocking a large number of Chinese apps, restricting Chinese investments. I guess there's one irony to this whole hostility that we have seen. I mean, India realizes certainly, and I'm sure China also does, that they can't change geography. They are neighbors, and they are two very, very large economies. There's obviously a difference in the power hierarchy in a relative sense. I mean, China's ability to project power is much more than that of India's, both from a geopolitical as well as a geoeconomic perspective. But then India clearly has very strong ambitions and aspirations. So with such kind of issues at hand, I think India and China also realize they have to learn to coexist, and they have to probably swallow bitter pills at certain points in time. They have to come back to the negotiating table over and over again for sorting out issues. But what I think has really happened on the latest occasion is that there is a very serious erosion of trust between the two countries.
Right.
And I think at least on the Indian side, because I'm much more familiar with the Indian discourse, on the Indian side, there's an extreme erosion of that trust. So as a result of that, moving ahead on any issue together is going to be a serious problem. It's going to take much more time than what it has earlier. And in a sense, this has made India seriously look out for partners. And India very clearly realizes that when it comes to taking on China in terms of an economic sense, China has shown this ability or proclivity to weaponize its economic clout. India does need partners to work with, and who better than partners who are democracies with common fundamentals, the spoken language of English, the rule of law, and other fundamentals that we associated with. And many of whom as well are facing complications in their relationship with China, including Canada, of course. So I think there is that common ground. There is that common ground which is undeniable. And much as the discourse can probably down the line widen into much deeper proportions of some kind, China will certainly remain one of the fundamental issues on the basis of which alliances are being crafted, including India.
Interesting. We've got about 30 seconds left, so I'll ask you a yes or no question. Are you optimistic about India's economic future?
Definitely. Definitely, I'm optimistic because I'm very confident about India's resilience and the fact that it is looking forward to engage with the rest of the world with a lot of robustness and energy, as shown by its interest in engaging in a large number of FTAs, including that with Canada. I'm optimistic.
Perfect. We are unfortunately out of time, but Dr. Palit, thank you for joining our program. It's been a real pleasure.
My pleasure.
Very interesting conversation with Dr. Palit. Obviously, a lot going on in India. Their rebound from the depths of the COVID pandemic is quite interesting, and lots of opportunities for Canada-India trade, as well as challenges. Being in that part of the world, there's always challenges, but they are a great trading partner to Canada, and we certainly hope that those trade links and investment links do deepen over time. Thanks for watching our program today. We'll be back with another one before you know it.